Chairman, all time has expired. Senator Lee.
Thank you very much, Mr. Chairman, and thank you, Chairman Bernanke. Mr. Bernanke, does quantitative easing on the margin tend to encourage private sector debt, or does it at least tend at the margin to discourage private sector deleveraging?
Well, on the one hand, with low interest rates, we do want people to spend normally. We want them to be able to afford a house or a car, and that's part of what puts the economy back to work. And then, but on the other hand, as the economy strengthens, jobs are created, they get more income, and interest rates are lower. So those factors overall help people deleverage. And as you look at the data, you'll see that consumers have deleveraged quite a bit over the past few years.
Does quantitative easing facilitate or otherwise promote the accumulation of government debt?
By whom?
At least at the margin?
By private citizens?
No. Does quantitative easing have an impact on the accumulation of government debt? Does it, at least at the margins, make it easier for government to acquire a lot of debt?
To issue a lot of debt, you mean?
Yeah.
Well, it does keep interest rates a bit lower in the short term, although, again, what we're trying to do is get a stronger economy, which will support higher interest rates going forward. And as I've mentioned, any kind of budgeting process that looks ahead even more than 1 year has to take into account the CBO's estimates that interest rates will be rising over the next few years and factor that in when you make your budgetary calculations. So I don't see how raising interest rates prematurely and, causing the economy to relapse back into recession would be helpful to fiscal policy. I think it's important for Congress to look at the 5- and 10-year window and look at how interest rates are expected to move and make decisions based on that.
To the extent quantitative easing does have these impacts that I've described, it does so basically by way of encouraging consumption. Isn't that sort of the aim of it?
Right. There's not enough demand in the economy, so it does encourage consumption, yes.
Okay. Was net equity extraction from homes and increased leverage a problem the last time the Fed had very low rates for a really prolonged period of time, let's say in the mid-2000s?
There was a lot of equity extraction from homes during that period. How much was due to the Fed policy? How much was due to lax lending policies? How much was due to regulation is a debated question.
And did the excessive leverage, whatever its cause, tend to exacerbate the crisis that arose in 2008?
Yes.
Did the Fed identify the weakness in housing in the mid-2000s and react to it? Well,
we saw that, and this goes back to my discussion with Representative Sanchez, we saw that the relationship between house prices and rents that house prices were very high relative to rents. House prices were historically very high, and so therefore it was always considered a possibility that house prices would come down. And in fact, when I became chairman in 2006, house prices were already coming down. So yes, we certainly saw that as a possibility. What we did not anticipate was how much damage that would do to our core financial institutions as it did, and that led to the crisis.
Yeah, these things are hard to anticipate.
Yes.
Would it be fair to say that that debt can create risks that are, by their very nature, difficult to anticipate, and once they arise, also difficult to address?
Excessive leverage can create instability, that's correct. But as I said, what we're seeing in households, and particularly in corporations, is a lot of deleveraging, much stronger balance sheets, more equity in the case of banks and firms than we saw prior to the crisis.
So what would you say to those who might be concerned that we could be facing a similar crisis coming up as we saw, in the mid-2000s?
Well, first, again, the indicators like asset prices, house prices, leverage, credit growth, All those things look very different today than they did before the crisis. Secondly, there's a whole lot of reform going on. Very bad mortgages were being made, as you know, and there's been a considerable amount of tightening up of the laws protecting consumers. There have been considerable increases in the amount of capital that banks have to hold and so on. So a lot has been done, and I'm not saying that this work is completely done, but we've certainly done a lot to make the system more resilient.
Thank you very much. I see my time's expired. Thank you, Chairman Brady.
Thank